Hey everybody, here we are, No Shill Zone. We skipped last week. We took a little break, but we are back with Ben Cowen. How's it going, Ben?
Pretty good. How about you? How you doing?
Good. Yeah, good, man. So, altcoins have made quite the run in the last couple weeks, and we'll have to see again. Does it continue or does it pull back? I will say this. So, going into this, we talked about, or at least I talked about some potential bullish pattern breakouts on alts. I was long some alts, but I will go on record now and say that I am short alts now. So again, this is a trader's life. Not everyone's a trader. I understand that, but again, you've seen some of these runs; they've gotten way ahead of their skis, in my opinion, and I do think that we're due for a pullback. And I was curious, what are your thoughts on what's going on?
Yeah, well, I think one of the things that we sort of I mentioned before is if the altcoin market moves, it's only because Bitcoin moved first, right? It's only because Bitcoin made a compelling move to the upside first. And look, as long as Bitcoin stays 37, 38K, right? As long as it's not moving too quickly in either direction, whether it's to the upside or the downside, the altcoin market, will take every opportunity that it can get to make that move. I was looking at Total 3. This is the first higher high that it's made. This is a series of lower highs basically ever since November of 2021, which is interesting because Bitcoin made its first higher high, like almost a year ago now. I mean, maybe like 10 months ago or so, it made its first higher high. It took the altcoin market an extra, 8, 9, 10 months before it did the same. So that is at least one development, that's I think worth at least notable. But I guess the thing is like, when Bitcoin gets a pullback, whenever that may be, what happens to the altcoin market, right? Does it put in like a higher low? Does it just go put in new lows again? I mean, we saw in October, there were plenty of altcoins putting in new lows. So I think that'll be sort of the big test for the altcoin market is how does it hold up whenever Bitcoin gets a pullback? What do you think about it? I mean, I know you were long alts over the last few weeks, but are you starting to sniff out a pullback?
Yeah, that's where I am. And let me show my chart because we can go over a few of these different altcoins that I'm kind of eyeing here. So, this is the Bitcoin chart. And Bitcoin, honestly, Bitcoin still looks pretty good. You have this flat top and you have this upsloping trend line here. And generally, price will break to the upside when you have a flat top. So this line gets up, squeezes price and eventually pushes price through the upside. So I actually expect further upside on Bitcoin, but I don't necessarily think that that's bullish for alts. I think if Bitcoin really starts to get a bid, it may actually take some power away from the alts. And what we can see here is actually, if you look at the price action in Bitcoin since the altcoin rally has been going nuts, Bitcoin's been sideways chopped to slightly higher. It's not been really ripping higher. The rip actually came prior to that, right? So then if we just look at some of these alts out here, like take a look at Solana, which has had an amazing run. Solana actually hit an upsloping trend line starting all the way back in, we're basically going back to 2021 through some pivot points, and we actually did hit a little high pivot. This candle here, see this big green candle up and then this candle down? That's known as a reversal candle, where again, it is basically the red reverses the entire green. We actually saw that on Bitcoin a couple times when it was still making moves to the downside. And then you're getting these inside bars, which are actually bear flags. So we're starting to see, this is the first time in the altcoin market where we're starting to see some bearish signals emerge. A couple other charts that I've been watching. Let's look at Cardano here, ADA. Cardano has had an amazing move up, but it's stalling right at some of these previous levels here. A couple others as well. Let me think about which other ones I have in the portfolio right now on the short side. I did pick up Near. It's a little bit of a smaller one, but I think it's still about a $1 billion market cap. But we just hit into this level, about the $2.18 level. But look at these moves, right? Again, charts tend to, think about a rubber band, right? You can stretch the rubber band and it gets tighter and tighter and tighter the more you stretch it. So it can be a big stretch, but at some point it snaps back. And by no means do I know if maybe we are in a bull market in the altcoins. I mean, I have no clue. But what I do know is that probability-wise, the more extended charts get, there tends to be this reflex snapback before the next move up potentially. And again, we could still go back to the lows for all I know. But again, for me, it's looking for these shorter-term opportunities, being long early on when things were depressed. Now things are not depressed anymore. They're extended, so I look to take moves on the short side.
Yeah, and I mean, I know we talked about that a few weeks ago. I think you sort of had like, in terms of the macro, things didn't really seem that great. But you're like, look, in the short term, these altcoins are likely going to run, just
Right.
because coming from very oversold conditions. One thing that you mentioned that I can sort of I would agree with is, if Bitcoin makes a strong move in either direction, right, whether it's up or down, that's normally where the altcoin market starts to show weakness with relative to Bitcoin. This is that chart. We've sort of talked about it a few times over the last several months, like that total three. You subtract out USDT, you divide it by Bitcoin, and it base at this point it is still a lower high, right? So like alts on their USD pairs just put in a higher high. Alts on their Bitcoin pairs have still not really taken out any of these prior highs, and I think that is sort of representative of the fact that alts are still weak with respect to Bitcoin, right? So like if Bitcoin were to rally beyond 38K, I would have to imagine that altcoins would likely go down against Bitcoin again. I mean, you can see last cycle, like it actually took several attempts, in fact, to sort of break down this level, right? It was really on the third attempt that it finally broke down. But by the way, when alts broke down here against Bitcoin last cycle, that was actually on a Bitcoin rally, right? It was the last rally that we had in 2019. It was like that June timeframe, just before the Fed started to cut rates, and that was where we finally saw the altcoin market sort of go into the final drop against Bitcoin, and then they slowly started to turn it around as we got into, say, like the halving year and QE returned.
Do you think, are you still in the camp that Ethereum is still headed lower compared to Bitcoin?
It's an interesting question. I mean, like, so if I pull up the Ether Bitcoin chart, so this is a chart that, I mean, I've been very bearish on it for a long time, right? And I mean, I remember back at the merge, everyone was calling for for the flipping, right? I mean, everyone. And it always looked to me like sort of like a distribution phase. You remember like Bitcoin's distribution phase back in 2021? I mean, I think you nailed the top, that secondary distribution phase, where the first distribution phase of Bitcoin USD, remember it had that like four tops, like back in 2021, and Ether Bitcoin kind of looked like that, and then you see the Ether Bitcoin sort of secondary top here, right? So just sort of going back to sort of Bitcoin, for people that might not remember, it had sort of these four tops, right? And then it came into these lows, and then eventually it had one more sort of like this double top up here. And I've always thought that was what Ether Bitcoin was doing, right? It had these four tops, sort of came down into these lows, and then after that, it basically rallied all the way back up to make people think that it was going to go to new highs, right? But in fact, it just ended up being a lower high. And then we had this descending wedge, right? Which I think technically is, more often than not, it's a bullish pattern. But I think when it's near highs, it doesn't necessarily have to break to the upside, right? And I was very vocal that it would likely break down. So my opinion right now is that the most likely direction for it still remains down, but I also know like there is some seasonality associated with Ethereum, with the exception of last year. So like a lot of times, like mid-December or January, Ethereum can start to show some strength against Bitcoin. But last year was an exception, right? Like last year, if you look in January, I mean, Ether just started going down against Bitcoin. So that seasonality doesn't necessarily always come into play. And what's interesting, if you look at this move, after coming down into this range, we had two green candles, a red, and then one more green before we had sort of the decision candle that took us back up, right? Here we are. We got two green, a red, a green. I almost wonder if next week will be decision time, on which way it's ultimately going to break. And one thing that I was also looking at with regards to Ethereum is, I've basically been expecting it to continue to underperform Bitcoin for the last year, and I think it's probably going to continue. But if you look, this is the running 1-year ROI of Bitcoin and Ethereum. And the orange line is Bitcoin, right? So you can see that it has started to show relative strength against Ethereum, right? Like clearly Bitcoin is starting to outperform Ethereum here. So my expectation is that eventually Ether Bitcoin breaks down to 0.03 to 0.04. But I don't know if it's going to happen this year or if it's going to sort of get a bounce in the end of the year and then happen next year.
Do you think that, I mean, do you think that Ethereum is here to stay as the leader? Like, I know there's been a lot of talk now that Solana could maybe eventually flip Ethereum. Is that even possible? What are your thoughts on that?
No, I don't think so. I mean, I think everyone is always talking about like the flippening and whatnot, and whether it's Ether flipping Bitcoin or an altcoin flipping Ether. The reality, I mean, this is my opinion, right? But the reality is Ethereum, my opinion. These always get me in trouble, but Ethereum, I'll say it anyways. Ethereum is just, I think it's so much further ahead than a lot of the other sort of the chains that are attempting to compete with it. And because of that, I don't really think an altcoin is going to be flipping Ethereum, at least not in the next, at least not in the next several years. Like, I can't really speak to what's going to happen like 10 years from now, right?
Right.
But I just don't see it happening. I think Ethereum will, continue to have that number 2 spot. The only reason I'm not, more bullish on Ether is just because I'm like, well, if it's going to bleed to Bitcoin, which is what it's been doing, right? You're better off just having Bitcoin, right? Because I mean, Bitcoin's less risky, theoretically, a higher market cap, less regulation, less regulatory risk, right? So I'm like, if you want exposure to crypto, Bitcoin is generally where you want to be, and most everything else is leading to it. So that's kind of the reason why I haven't been as bullish on Ethereum, just because I think it's in the phase of bleeding back to Bitcoin. Has not been a popular view, but I mean, it's been bleeding all year. Right? It's been bleeding all year.
Yeah.
What do you think about Ether Bitcoin? Are you I mean, look, a lot of altcoins have gotten pretty significant bounces, right? So it's not out of the question for Ethereum to get a bounce here, right? I mean, and
Yeah.
if it does, what do you think?
Yeah. So, I mean, the only thing I can see here is, at least on the chart in the near term, right? To me, it's almost like watching Ethereum in the past. Like Bitcoin is doing or Bitcoin did what Ethereum is doing now a month ago or 2 months ago. And just to show this here is, you had this previous pivot top right here in April, right? And then we kind of consolidated, and then we just retested that high. If we go to the Bitcoin chart, what's fascinating about this is that was basically right here, right? Here was your high, and you came back down, and you retested, and then you pulled back before breaking out. So again, it's hard to know whether or not versus Bitcoin, Ethereum will drop, but it almost looks to me like this is where we're just coming off the second test of this high on Ethereum, and Bitcoin is basically like 3 months faster. And so it'd be interesting to see if we eventually break out on Ethereum above this level here, right? This high pivot. But at that point, my guess is Bitcoin's a lot higher, right? So that's probably per the spot ETF at that point, in which case, you could see in the 40,000s, and then Ethereum's just breaking out of this level. Next target would be about $2,500 on Ethereum. So yeah, that would just be kind of the little observation that I see.
Yeah, I think that's the thing. Like, if Ether goes higher, it's only because Bitcoin kept going higher, right? Like in 2019, Bitcoin and Ethereum basically topped out around the same time, which is very different than like 2021, at least like in April, where Bitcoin topped out and then Ethereum topped out a month later. But in the pre-halving year, it was Bitcoin and Ethereum topped out around the same time. So I'm sort of curious about that. By the way, one of the things that I've looked at with Ethereum a little bit, I'm actually curious to sort of get your opinion on this, because I feel like, I mean, as a technician, I mean, I think you're more of a technician than I possibly am, but one thing I'm curious, do you think it's more relevant to look at this pattern like this, sort of like an ascending wedge like that, meaning like, it could even go up to 2,300 even and still be within this range? Or do you think it's more relevant to look at it like this, right, where it's sort of an ascending wedge? Like, what do you have like a preference on that?
Yeah, at least for me. So like, if you raise that line up to the highs of those two.
Sorry, so right here?
No, to the actual. So take that middle high and just do a flat line there, and then stretch it all the way back to the bull market lows. That would be kind of how I would look at that. See that middle point right there, that little wick that we went down on. That to me,
Right.
so that would be like the flat top. And so I think that's how I'd view it, with that underline coming up. So you'd have that wedge pattern. But that looks to me like to be the kind of the real trend line that I would be keeping an eye on, which it is kind of bullish there. Yeah.
Well, one interesting thing is that's actually where it topped out in 2019. Was that that same level, which also I believe corresponded to, well, no, I think it didn't make it to the 100 week. At that point, it almost got there, and then it sort of made it there a little bit later, just before the pandemic drop happened.
Yeah.
But yeah,
Well,
I
no,
mean, I think maybe you're right. Maybe it's best looked at as a horizontal line rather than like an ascending one.
I think the ascending line is a possibility too, but it's probably more minor than the flat line. The trend lines that go back further, so when you can kind of connect them back, they have more power like that. But the question I had is for you is that do you think that this bull run in the alts is directly related to the Fed and basically at this point, I think we all are in agreement the Fed's done raising. And I've also seen the Russell, right? The IWM has had a pretty big bounce. Like it's really, it's its biggest bounce in a long, long time here. And you wonder if the thought of, rates maybe coming down was part of the ignition of the altcoin rally.
Yeah, I think a lot of it goes back to liquidity.
Yeah.
Like, I mean, you can see there's been a pretty big boost here in liquidity recently. This is just overlaying like net liquidity with total 3, the altcoin market. So I think that probably has something to do with it. But I also think you're right. I mean, I think history shows that when the Fed pauses and when the market really accepts that it is a real pause, which it seems like the market has, markets rally for a few months, right? And then eventually we have to get to the effects of all the rate hikes and how much damage are they going to do, and then we go into the sort of the cutting phase of the cycle, right? But again, when the Fed starts cutting, historically, that's not the most bullish thing for risk assets. But we could still be half a year away from that. I don't know how far away that point in time is. And someone was asking me like, well, why has net liquidity gone up so much? I think there's a couple of reasons. One of the reasons is because the dollar has gone down, right? The dollar has had a pretty big pullback recently, so that's obviously one reason. Because if you're converting like the balance sheet of all these other central banks into dollars, right, and they're having more favorable conversions now, that's one thing. But there's a couple other things. If you look at the reverse repo, interestingly, total net liquidity is up about 600 billion since October, and the reverse repo has been drained by about 600 billion since since October. So I do think there's some element of like just trying to keep things afloat, letting liquidity flow back into the markets just so there's not some type of major collapse or anything like that. So that's more. I think a lot of it just sort of comes back to liquidity and revolving around that. Do you think that's sort of the main point?
I do. I mean, I think more than any of us want to admit, the amount of money in the system has to do with whether or not we make money on long investments, whether it's commodities, whether it's stocks, or whether it's crypto. And again, it kind of stinks when if you think about it as an investor. I mean, the whole idea of investing is like, oh, I want to be an expert. I want to be able to find these like trades and everything like that. And I unfortunately think a lot of it comes down to just simply like how much money is flowing into the system, because it has to be put to work, right? Institutions that have billions of dollars, they're not going to just park it in an account not making returns. They're going to deploy that money because they can make a return on that money. And so it pushes it in, it creates more loans, which then people take those loans and that money filters into the economy. And then vice versa. What we know is that when the Fed sucks it out, people, tighter lending practices, tighter issues like that. So I do think that's a big play on this, man. The one question I had, I want to show my dollar chart because I actually have a big, check this out. I had all these trend lines of support here on the dollar, and the dollar has now broken below. And I think this is something interesting here. So, I mean, the dollar is really starting to go into kind of a pseudo free fall here. We do have some support around 103 on the Dixie, but if it continues down, there's this trend line down here that stretches all the way back to 2021. And you're talking about going down to about 101.70, 101.60 here. So again, the question then is, and this is a weird juxtaposition. I talked about this in my game plan this morning, is that I have the dollar breaking lower and continuing lower, but I have rates actually starting to stall out. And if we look at the 10-year yield here, the 10-year yield's actually into support and actually higher today. And so what's weird about this is that generally rates and the dollar go together. Right. So we've seen when yields fall and the dollar falls, the markets rally. But here we're seeing a little bit of divergence. And the only thing that I can make sense of from this is that, is it possible that the bond market's starting to understand that the economy is going to weaken substantially, but inflation is not going to drop substantially, right? Because if inflation drops substantially, then yields would come down. Then the Fed could ease more. But again, if the economy weakens, so essentially like stagflation, right? The idea of stagflation, a very weak economy, but potentially inflation keeping rates 4%, 4.5%. What do you know, any thoughts on that?
It'd almost probably be worse than a recession, honestly, if you
Yeah.
had, something like that play out. Yeah, I mean, like the dollar has been notably weaker over the last couple of weeks. The only thing that and again, like momentum is a hell of a thing. I mean, like, when, a lot of times you just ride momentum and it works until it doesn't, right? But with regards to the dollar, it's sort of like how the euro relates to the dollar. So I don't know if you remember, but like back in October, I drew this out, right? Like where I said, hey, like it's probably going to rally back up because nothing goes down in a straight line, right? Like if the euro is going down against the dollar, it's not just going to go down in a straight line. There will be some type of like back test, right? I think you would call it like the scene of the crime, right? Sort of back test, the scene of the crime. And you can kind of see that like it's actually doing that right now, right? Like it had this rally, and I obviously didn't draw it perfectly. Like it's it's still moving higher a couple of weeks later, but that's an interesting spot for the dollar, or sorry, for the euro against the dollar, about 109, going between 109, 110. So I'd be watching this, right? Like, does this actually break back out and get up here? Then yes, the dollar is in free fall. But if this just is a rejection, by the way, I mean, for a lot of times, if the euro is going up against the dollar, that's kind of a sign that we're in risk on, right? If the euro is going up, but if the euro gets rejected here, then you could switch back to risk off very, very quickly. So, look, I think there are a lot of elements with the bond market of the bond market. What TLT went to like 82, 83, something like that. I think it's either the lows or pretty close to the lows, right? Like, because I don't think that the economy will be able to handle like, high rates forever. I think eventually that will ultimately filter through. But in the short term, the reason why, and I think we talked about this a few weeks ago. I don't know if you remember when Yellen, when the market, the Treasury refunding announcement, the market was expecting longer duration to be issued, shorter duration was issued. And I was like, all right, guys, this is bullish for both stocks and bonds. And ever since then, I mean, stocks are up, 10%, bonds are only up about 5%. So I think that has something to do with it. I don't know, man. I think that Yellen, by doing that, it basically allowed a lot of that pressure on the stock market to kind of come off, right? And that was why back in October, I said it was at least short-term bullish for stocks. By the way, the S&P and I think the Nasdaq is actually at a new yearly high. Isn't that right?
I believe you're right. Yeah. I mean, it has been one of the craziest moves in the NASDAQ here. I'll show my screen on this because it is pretty impressive. So, basically on the NASDAQ here, we have, we're not quite at the new highs from July, but we're getting darn close. But the NASDAQ 100, that's different. We are making new highs here. Now, the difference here is that the NASDAQ 100 is just 100 stocks, and it is ruled by basically 5 stocks now. It used to be the Magnificent Seven. Tesla's now kind of become a mess, and even Meta's still strong. But what's amazing about this, couple stats that I was hearing over the weekend, is that the hedge fund allocation in the top 5 stocks, so we're talking Microsoft, Apple, Google, Amazon, and Nvidia, is now the highest it has ever been in terms of allocation. So the way over leveraged in these big names. And of the NASDAQ 100 and the S&P, it's now at new all-time highs for percentage of those indexes. So those 5 stocks now make up more than they ever have in those indexes. I think in the S&P, it's over 25% of the S&P is 5 stocks, and now over 50% is 5 stocks of the S&P of the NASDAQ 100. So again, as long as the party's going on, it's great for investors, right? They will carry this market up on their back as long as the party goes on. Then if it doesn't and these start to fall, that's where things get crazy.
Yeah, I'm curious, like, because in one sense, it's like the same thing that's going on in crypto, right? Like the Bitcoin dominance has gone higher essentially all year while Bitcoin goes up, right? And people are sort of going back to maybe Bitcoin is like the Magnificent Seven, but it's like the Magnificent One of crypto, right?
Yeah.
So I wonder, it might be one interesting exercise could be to like look at, maybe like the dominance of like the Magnificent Seven and kind of see how that is playing out, because a lot of stocks, I mean, like the Russell was at the October 2022 lows just a few weeks ago.
Yeah. Yeah, the Russell actually was the chart on the Russell is still not great. I mean, it's a good bounce that we've had lately, but you can clearly see, I mean, look at how far away it is from the highs of this year or the highs of 2021, but even the highs of just, this year right over here versus we know the Nasdaq's making new yearly highs. The S&P's really close now to those highs as well. And I think part of that is the bank stocks. The bank stocks have been under pressure. The banks are starting to play catch up because of interest rates coming back down. But again, I look at it like this is that how is the real underlying economy? Is it good or bad? Well, if it was that good, then the 2,000 stocks that make up the Russell should be doing much, much better versus a select 5 stocks now that are just carrying this market on the back of it. And again, it's just not healthy for the overall economy to have 5 stocks essentially dictating the markets up or down.
Yeah, I was actually looking at the Russell divided by the S&P 500 and then overlaying interest rates. It's kind of interesting. You can see that like last cycle, the Russell was just bleeding against the S&P, and it didn't get a durable move to the upside until the Fed entered into their last rate cut, right? Basically a new cycle. So you could see something like that play out. And it kind of makes sense, right? Like the Fed, while there have been a lot of like Russell 2000 companies that have been going, a lot of them they're not profitable, right? Like they're losing money. Their earnings are bad. You still have like the major juggernauts, right? Like Apple and Microsoft and Google and Nvidia, like they're carrying the space, right? So as long as that's the case, and and the broad index is going higher, Fed has no reason to pivot, right? I mean, like they just simply have no reason. But I guess it's when the blue chips show weakness, right? That is when I guess an eventual pivot could actually come. Do you? By the way, I'm curious. The market is suggesting first rate cut is going to come sometime mid next year. Do you think we could get a cut as early as mid next year? Do you think that's optimistic?
I think there is. I think the Fed has it put in now where they understand they probably can't drop interest rates like they did in the last cycle with COVID down to close to zero. But I'm a big fan of thinking that, like, if I was in the Fed's position, if I was Jerome Powell, and let's say the stock market really goes into a tailspin, if the economy goes into a recession, there's a way for them to kind of toe the line by doing what I call a mercy cut, right? So it's like you just want to give the market the hope. The hope is very important to the stock market. It's everything, right? So if they were to just do 1 or 2 cuts and the market can say, oh, okay, then the market can rally up. And then believe it or not, if you look at what market value, what money printing the stock market has an impact on for people that have investments, it can actually stimulate the economy. And one of the things I was talking about is if you look at charts like, let me show mine here as we wrap things up in a few. But if we go to like Nvidia, right? So Nvidia was a trillion or is $1 trillion stock. And this stock has rallied it has rallied 27% in basically 3 weeks. That's $270 billion essentially created out of thin air, right? If you look at Apple, a $3 trillion stock is up 16%. So now you're talking like, basically almost $500 billion. So there's like $1.5 trillion of wealth that has been created in the last 3 weeks. And so that can have a stimulative effect. And I think if the market goes into free fall, if the economy does, and the Fed just wants to do a mercy cut, and think about this, we're at a point where just the mere aspect of the Fed not hiking anymore created this type of rally. So think about what if the Fed actually did do a rate cut, maybe it does lift. And I think that's kind of the mentality of the Fed. The Fed's kind of thinking, oh, well, we understand we can't drop rates back down that low. That just can't happen unless we're in a depression. But we can still stimulate along the road by just doing a rate cut here and there. And that's my guess of what they're going to try to do.
Do you think there's any hopes of a soft landing, or do you think like the hard landing is the more likely outcome eventually? I mean, not to say that it has to happen this year. I mean, it could be a year from now, right? But do you think that the hard landing is the most likely outcome at the end of this? Or
I do. I really do, to be honest. I think that, one thing we learned, and we learned this from the dot-com era, and then we learned it from the 2008, 2009 crisis, is that economic data stays very, very, very strong, and then it starts to crack, and then it falls off a cliff. Right. And so I think with jobless claims, right, last week they expected 220,000. It came in at 231. I think it was the highest number in over a year. My guess is we're going to start to see these numbers accelerate towards 300,000 very, very quickly. And my guess is by in January, we're all of a sudden with a new narrative of, oh, this isn't a soft landing anymore. And I'm a big believer that, again, and I think we've said this before, but the Fed really has never generated this perfect landing because they're dealing with back-looking data, they're dealing with emotion, they're dealing with these other things. So I do think that they're probably overall going too hard, especially with the idea of not wanting to repeat the mistakes of the 70s and 80s, and then therefore we'll have to pay the price economically.
Right. I just want to show one last chart, and I think we
Yep.
need to go after that. But there was one example, right? Like, so this is the Treasury yield spreads, 3-month and 10-year. So normally, right after an inversion, sometimes even during inversion, if you have a period of high inflation, which is kind of like what we have today, right, in the 70s. But normally you go into the economic downturn recession after that. There is one example where we didn't, and that was 1967, where you can see there was a very brief inversion, right? Very, very brief inversion of the yield curve. It only lasted a few months. And then the market essentially rallied for one more year. Now, while there was not a recession, we still got a recession. We basically kicked the can down the road a couple of years, right? And the S&P did eventually go put in a new low, but that's like the one example of yield curve inversion where you had an inverted yield curve for more than just like a couple of days, right? It was like a 4 to 5 month window. You had an inverted yield curve, and you still got a recession, but it was kicked down. The can was kicked down the road just a little bit. But anyways,
A quick question on that? Is this the longest period that we've ever had an inversion for?
So I'm in the process of we're going to be creating some charts looking at that. But I don't think it is, not yet. I mean, there are some, like this period over here. See, the thing is like there's like a day here in February of 74, right, where it like was uninverted for one day. So that essentially resets the entire count. But I don't know. I don't know if it's the longest. If it is, it's not by much. Maybe let's look at the 2-year and the 10-year, because that was something that a lot of people. I mean, you can see over here back in like the late 70s, the inversion of the 2-year and the 10-year started in August of 78, and it did not become uninverted until May of 1980, right? So you're talking about almost 2 years. This inversion started in July of 2022. Obviously, we're about a year and a half out from that, right? So about the 2-year mark would probably, would be somewhere, just less than 2 years would be sometime early next year.
Interesting. And then, obviously in the 70s, that's when inflation kind of was the last time we had this, sort of trouble with inflation, it seems, at least. So interesting.
Right.
All right.
All
right, man. Yeah, we should get going. We don't want to bore people too much here, but with this great stuff, I could go on and on for sure. But guys, Ben's socials, all his data is right below my feed here. It's awesome, man. I could go on and talk with Ben for a long time here about all this great stuff, and hopefully you guys enjoy it as much as we do. But thank you guys, and Ben, any place else can they come find you at your website?
Yeah, intothecryptoverse.com. But guys, make sure you guys check out Gareth's stuff. All his socials are in the description below. His website as well, inthemoneystocks.com. You can find that all down below, and we're just going to provide our honest opinion. Sometimes we're right, sometimes we're wrong, but at least that's what what we think are the most likely outcomes, and we'll stick to that no matter what. Anyways, thank you guys for tuning in. Subscribe, both of us, and we'll see you guys next time.